And so maybe can you introduce Maelstrom to the people watching us? Like what makes maybe Maelstrom different from like the other funds like in town?
Yeah, so the biggest difference is we don't have outside investors. So it's just my money, which basically means we do what the fuck I want to do, and I don't have to listen to a bunch of Muppets who might have a lot of money but have no fucking clue about crypto. And so that allows us a lot of freedom in the types of deals that we do. We don't do large check sizes. Because again, we're not trying to compete with larger funds who have to deploy lots of capital. We are very patient because we don't have to deploy capital to get paid like a traditional venture capital fund. Nobody at Railstrom, including myself, makes any money unless we do deals that are good deals and we sell them for more than we paid for them. So it's a very markets focused fund. And I think that allows us to be very practical with how we speak to founders, the type of advice that we give. We're not trying to screw anyone. We don't own a large percentage of any of these projects. We're trying to be as helpful as we can, and in some cases, we're able to amplify the success of our projects given the wide reach that my voice and my writing has.
But like, are you kind of like a crypto VC in a way, or are you also invested in the other markets available to you? Like, is it 100% focused on crypto and mostly like on pre-seed, seed, and Series A investments, or are you also, I don't know, buying treasury bills like this kind of shit with the fund?
So the fund Maelstrom is just doing crypto. So we primarily do early stage token deals. We love tokens. I fucking hate equity. I don't know how I'm going to get paid. I don't want to wait 7 years to get my money back. I want my money back immediately. So I love tokens. So that's where we focus a lot of our efforts. Outside of Maelstrom, my entire like global portfolio, yeah, I have treasury bills. I've got some stonks, some, dog shit TradFi things. And I sort of try to manage that blend of, okay, well, if crypto is not doing well because interest rates are rising, I want to participate in that rate move. But as it seems like the global central banks are going to start printing money again in a crazy amount, then I want to give back in the crypto bucket. So it's kind of just moving assets between each of the two buckets, with the express goal being that I want to maintain a standard purchasing power or standard lifestyle in terms of energy. So I consume a lot of energy living the life that I lead. I like it. I want to keep doing it. And if the price of oil is $1,000 10 years from now, I want my portfolio to have appreciated enough so that I can afford to live the way I like to live, even if energy gets much more expensive.
You mentioned that you hate having your money kind of locked in a way for like, I don't know, 7 years, like while investing in pre-seed, seed, and Series A kind of rounds for companies. Do you think that we'll see more and more tokenized stocks so that we could exchange like easily like this kind of like companies that are not like available to everyone, I don't know, listed on the NASDAQ or whatever? Or is it something that will never change in a way?
Well, I mean, I'm not really bullish on tokenized stocks because I believe that there's so much liquidity in the traditional way of doing it. Why, unless you have some massive new distribution channel, why go through all the effort of tokenizing it and making it a little bit more cumbersome? My vision is that the new organizations of the future are not going to be like joint stock companies that we've essentially been building since the 17th century. We're going to change the way that we organize economic activity. I think a lot of that's going to be spurred on by the advent of artificial intelligence and how these computers and humans work together to do economic things. They're not going to launch companies. I think they're going to launch decentralized autonomous organization, or DAOs. I think they're going to exist primarily on a blockchain native substrate like an Ethereum. So the most exciting entrepreneurial activities of the future are going to be token first things. They're never even going to think about what's equity. I don't even know what that is. I know that a DAO can issue tokens, and I know about treasury management. I know that governance tokens and all these different things that we're familiar with and that'll be new in the token ecosystem. But why would I ever incorporate a company? Why would a computer incorporate a company and deal with lawyers and courts and paperwork and all these different things? Like, why the fuck am I still signing pieces of paper with a pen? I fucking hate that shit. Like, this makes no fucking sense.
Yeah, I think the world is kind of like moving very slowly on some specific areas, which is kind of like weird because we have like some great innovations like AI, ChatGPT, these kind of things. So this is quite surprising that, yeah, some our areas are kind of slow compared to other ones. we were mentioning Maelstrom and like VCs. Are VCs that good? Are they fully profiting from the advantage over the retail traders, the retail investors? We've seen some companies like 3 Hour Capital, or even like FTX Ventures, Alameda Research get wrecked during this cycle, which is kind of crazy to me because they had like kind of gold mode, like seeing like everyone's order, everyone's investments, being able to invest like before anyone. And still they managed to get wrecked. So what are your views, your critical views on VCs and how they are profiting from their advantage or not over the retail investors and traders?
So I think venture capital funds, and you can look at the statistics in general, are bad things, bad investments. And it doesn't mean that you're going to lose your money. It's just that your opportunity cost of putting your money in a VC fund versus buying the S&P 500 or some a similar sort of broad-based equity index. Like you're paying these guys, mostly guys, a lot of money to do fuck all, and you could have just put your money in an index fund and paid a lot less in fees and got way better performance. From 2010 to 2020, the name of the game was let's raise a bunch of money, give it to some consumer or SaaS application. And what do? They go out and they buy Facebook and Google ads. So why am I owning your dumbass charging me 2 and 20 where I could just go buy Facebook and Google and make better returns? So I think venture capital as an asset class, unless you're like the top firms, the Kleiner Perkins, A16Zs, the Index Ventures, all those guys, yeah, they make money. But the chance of you as some random Muppet getting your money into those funds is impossible. So you're just left with all these dog shit managers who like try to do the same things as the other funds, but just not as good because their deal flow sucks. And you end up underperforming the market. So VC as an asset class is bullshit, in my opinion. But again, there are outliers, but you as the average investor will never be able to invest in those funds.
So I guess you will be on the top because you will not create like a VC if you don't believe in
exactly.
it.
I mean, if I'm not on the top, who cares? It's just my money. I'm not trying to earn fees from other people, and it allows me to be very free with how I think and how I invest. And if I win, I win. If I lose, I lose. And there's no one to blame but myself and the other Maelstrom employees.
How can you be on the top as a VC in your opinion?
Well, again, it comes down to incentives, right? If you are, the name of the game in VC is not making money for your investors. The name of the game in VC is asset aggregation. So people need to understand that the business is not to make money. The business is to aggregate money and charge you management fees. I make way more money making 2% on 10 billion than knocking out of the park with like a $50 million fund in terms of upside performance. So when you understand that it's all about aggregating assets, then it makes sense why VCs are very risk averse. So they want to invest in the deal that everybody else has invested in, because if they lose money, they lost money together. So which means that as a firm, you're not going to take the sort of risk that generate the super high returning things, because those are the things that people don't actually appreciate today, but come to appreciate in the future. And it's very few people are able to exist in a institutionalized framework of an asset manager and make those decisions and still have a job 20, 30 years down the line. Because invariably, to hit those type of returns, you're going to have to invest in things that everybody said was dog shit and fails. And when you do that, you lose your job. And so the name of the game in fiduciary investment management is do not lose your job, because you make so much money doing fuck all. Why would you want to risk it? So it's that persuasive like group think, because it makes sense for the manager to think that way. And so that's how you stay on top, is not having those incentives that are similar to a large asset manager. So if you're just managing your own money, your incentive is, okay, I need to make enough money for my family, to provide for myself, to have the standard of living that I want to have. I'm not trying to basically scam my investors by putting up some pretty pitch decks, but just like, hey, give me your money, I'll charge you 2%. Maybe I'll make you some money 10 years down the line, but you know what? I got my management fees every year and I can get my bonus, right? That's the game of fiduciary and institutional money management.